Overnight, the world woke up to headlines that sent immediate shockwaves through the financial markets. Israel has launched a military strike on Iran. Before most people even had their morning coffee, the markets were already in turmoil. Oil prices surged, and stock futures plummeted. This isn't just a distant headline. This is an event with direct and immediate consequences for your money, your investments, and your financial security. So today, we're cutting through the noise to break down exactly what happened, what it means for the markets, and what you need to be watching. This is Smart Money Sense. Let's start with the most immediate reaction, the price of oil. Brent crude, the global benchmark, jumped, hitting its highest price since January. Why? The market hates uncertainty, and a direct conflict in the Middle East is the ultimate uncertainty for energy. The fear is that this could escalate into a wider war that disrupts the flow of oil from one of the most critical regions in the world, choking off global supply. This fear of disruption creates a classic flight to safety scenario. And while investors flee to safety, they flee from risk. That brings us to the stock market. Overnight, Dow Jones, S&P 500, and Nasdaq futures all took a significant hit. We saw an immediate sea of red as investors priced in this new geopolitical risk. The thinking is simple: higher energy costs squeeze corporate profits and consumer spending, and the threat of a wider conflict could slow down the entire global economy. But in every market shift, there are clear winners and losers. Let's look at the losers first. Airline stocks were hit hard. Major airlines were forced to cancel flights and reroute others away from the airspace over Iran and surrounding countries. That's an immediate operational headache, but the bigger problem is fuel costs. A sustained spike in oil prices directly eats into their profit margins, and the market reacted instantly. On the flip side, who benefits from this? Two sectors immediately come to mind: defense and energy. Shares of major defense contractors saw a pre-market jump. The unfortunate reality is that conflict, or the threat of it, often leads to increased government spending on military hardware. And, of course, energy companies. With crude oil prices soaring, the profit outlook for oil and gas producers gets a major boost. We saw stocks for companies in the energy sector climb as a direct result of the overnight events. So, why does this matter to you, even if you don't own airline or defense stocks? Two words: inflation and interest rates. A sustained rise in oil prices doesn't just mean more pain at the pump. It increases transportation costs for every product you buy, from groceries to electronics, which can push overall inflation higher. And we all know what the Federal Reserve does when it's worried about inflation: it hesitates to cut interest rates, and might even consider raising them. So, an event halfway across the world can directly impact the cost of your mortgage, your car loan, and your credit card debt. So, what should a smart investor do? The first rule is, don't panic. The second is, pay close attention. The market has priced in the initial shock, but what comes next is critical. Investors are now concerned about the potential for further escalation. Watch the headlines for signs of retaliation or de-escalation. Are world leaders calling for calm, or are threats escalating? The market will react, second by second, to this news flow. This volatility is the new reality for now. Understanding the sectors at play and the broader economic risks is your best defense. Today's events are a stark reminder that the world of finance is interconnected with everything else. Geopolitical risk isn't just a textbook term, it's a real force that can impact your portfolio overnight. Our job here is to help you understand these forces. If you found this analysis helpful, make sure you're subscribed and hit that notification bell so you never miss a deep dive into the financial news that truly matters. Thanks for watching. Stay smart.